Richard, this is a not surprising outcome for oil prices, but oil prices, despite geopolitical tensions, have remained in a relatively tight range. Can you take us through why that is?
That's certainly true. If you look at the oil market as a whole, we've got a situation where demand growth hasn't been great. Inventories have been relatively comfortable on both crude and products through this year. We're starting to see draws now during the kind of peak summer season, but we haven't had a fundamental picture that is very bullish, and so prices have mostly remained in a range and actually come under selling pressure apart from these periods of geopolitical tension. And undoubtedly on the geopolitical side, we've seen a lot of events and a lot of tensions this year, but not a lot of actual supply losses.
If that's the case, what exactly then do investors have to watch out for with regard to risks to the upside or downside in oil if it's not going to be something like an increasingly escalating geopolitical situation in the Middle East?
Well, I think the very short-term investors are definitely going to have to look very closely at what's happening in the Middle East. We're waiting for Iran and the Axis of Resistance militant groups' response to Israel. It's very likely to be some kind of strike or attack, potentially within the next few days or over the weekend. But unless that does get out of hand, and we, as our base case, don't think it will, but unless that really escalates to the point where it threatens supply, then the risk premium attached to those events could fade within the next few weeks. But I think we should also be watching the situation in Venezuela and after the elections there and the disputes, and more generally, how much do inventories draw over the summer?
Richard, how much, though, are supplies at risk, even with all those tensions? You mentioned this idea, this notion that we have a dynamic, economically speaking, around the world that could put perhaps a cap on those crude oil prices. What exactly is the stability of supplies around the world, and can it be affected by some of those situations in Venezuela and the Middle East?
At the moment, the risks aren't too high. The situation would have to escalate a lot in the Middle East, but if, for instance, an Iranian attack on Israel prompted a counterstrike, Israel might target Iranian oil infrastructure. We're some way off that, but Iran is exporting over 1.5 million barrels a day despite sanctions, so any loss or reduction in that could be felt in the market. Similarly, Venezuela's production has been able to increase because of sanctions relief and a relatively loose enforcement. So a dramatic situation there could mean some downsides for supply. But even in those scenarios, the fact that OPEC Plus has a lot of spare capacity is going to provide something of a buffer. So there is much less of a upside potential, I think, from pure geopolitics than we've seen over the last few years.